Afternoon. This is Rich Morrison, and welcome to my latest edition of the Thinking Cap, where today we're going to take a look at the corn market, what there is of the corn market. We've had a bit of a shock to the market here this morning. Market's making new lows, so thought we'd at least see where we're at and kind of talk about a few ideas that we might have as we go forward, get a little closer to fall. Here's kind of a look at what everybody thinks of the corn crop right now. It looks like it's going to be a big corn crop. We'll dig into that here in just a minute. As far as the crop ratings last night, as of today, this date, we're looking at a record high good to excellent number. 73% of the U.S. corn right now rated good to excellent. We've never had a rating that high. We're holding well into August, it looks like. The forecast as we go into the middle of the month continues to show rain in the western corn belt. Looks like one of the wettest droughts we've ever had this year because, we went into the year talking hot, dry summer, late summer, and we continue to see rain in the forecast. So that doesn't seem like it's going to be enough to turn the market. We've got a huge USDA report next Tuesday, the 12th. USDA will make its first update to the yield from the trend line number they were using all year, which is 181. This person had this on Twitter this morning asking the question, where do you think the yield's going to be? The majority of the people guessed 185 or higher. When you look at the stocks matrix, and I'll have this in my latest market report email letter, but the matrix, if you're not familiar with it, we start out with the beginning stock number. The government says 1.34 billion bushels. They're projecting next year to be at or right real close to a record demand number, 15.4 billion bushels of corn expected to be used next year. So we've got acres on the left-hand side, and the 95,203, that's USDA's current number. They're going to continue to use that planted acreage number. The question, I think, going forward then is what are the harvested acreage number? Now, as you get out into January, they may go back and change these planted numbers too. But I think here in the near term, if you're going to expect any changes, it's probably going to be in the percentage of harvested acres. Did we lose some to flooding down in the Mid-South, for example? Will they count prevented plant? By the way, they will look at prevented plant here in August and potentially plug some of those numbers in. So maybe we'll see some lower acres. Right now, they're estimating we're going to harvest a little over 91% of our planted acres. Then we've got yields across the top, and I've collected a few so far that we've had in anticipation of next Tuesday's report. The big one last night, Stone X estimated the U.S. corn yield at 188.1 bushel per acre. I mentioned 185 maybe is the trade average. That survey a minute ago showed, the bulk of the people think we're going to be above 185. Dr. Cordonier with Pro Farmer, he's still using 182. Robert McClure, gentleman on Twitter, he's using AI, I guess, to come up with a number based on, based on precipitation, based on ratings, etc. He was using 180.8 here this morning. So those are the ones I've got so far. We'll continue to get a few numbers from around the trade here ahead of the report. But, if you use the Stone X number at 86.77 million acres harvested. Now you're looking at ending stocks almost growing 1 billion bushels this year. We're pushing up close to 2.3 billion. And I think one thing that's big to talk about this year is we're already starting out forecasting at or a new record high in demand. Last year, this number has grown all through the year. We started out below 15 billion bushels in demand, and we continue to be surprised every month when exports were good, when ethanol demand was good. This year, that's already in the equation. So I don't see that we're going to get this big surprise in demand that we had a year ago. The dark numbers on this matrix then down below represent anything over 1.8 billion bushels, which I think anything over 1.8 is big. And probably not friendly. As you get down into the lighter green numbers, then we're between this year's carry out and 1.8. You're kind of in a no man's land a little bit. Maybe you get a little friendly bump from where we're at today. The red numbers become bullish. So if you take 3 million acres out and if USDA sticks on its 181, then yeah, you start to be a little bit bullish corn. And so you can kind of see, what it's going to take to make the market move. And, if we're stuck up here in this 185 to 188 range and acres don't slip, then it's going to be difficult to get this market to get much upside to it. And so that's the purpose of the matrix. I think it kind of lays it out pretty well. And I think that's what makes this August crop report very important. How big is USDA going to project the yield? Are they going to bump it to 183? Are they going to go on up to 185 or above? I think that's the big deal here in August. Then we start getting a lot of the crop tours, the pro farmer tours later this month. So we'll have a lot of tour information by the time we get the September crop report. And so you could probably make a case, maybe USDA doesn't raise it all the way this time. Maybe they make a little bump based on the crop ratings, maybe make another bump in September. I guess we'll have to wait and see. So looking at last year, what happened to the markets last year? Well, this is the path we took a year ago. And, all of us that were hoping we would see a rally in June or July, it didn't happen. The market peaked out in mid-May, early May. It was hot and dry early in the season last year. Weather changed, became good through the growing season. We saw heavy farmer liquidation in August that eventually took December 24 corn down to 385 a bushel. The funds, however, had maximized their short position by the end of July. So it wasn't fund selling, it was farmer selling that eventually drove the market on down to its new low. Then markets kind of sort of, made their way back up over $4 again in the December contract prior to expiration. Here's where we're at this year. A little bit similar, although we didn't get the May rally even. But this year, of course, we did not get the June and July rally. The markets have sold off. We had a gap lower the 4th of July, Monday. Never quite filled that chart gap, got back to 430 and a quarter. Now here we are today, trading to a new low, traded down to 402 this morning. The best thing I can say about the chart today is that the RSI at 33 doesn't necessarily mean we're at a bottom, but stochastics starting to push into single digits. You would have to think that, maybe the market's trading this big report before the report ever comes out. And so I kind of lean that direction right now. I'm not leaning towards a 188 crop at this point. Who knows? I mean, maybe it's possible, but I think we're going to have to see some actual harvest before we can make that claim. So that's where we're at today. You look back at last year, we bottomed at 385 here in August. So we're what, 17 cents away from that today. If you don't get a friendly report next Tuesday, I think that's definitely in the cards. You could go back and push that 385 area at some point here prior to harvest. And I guess I'm still in the camp of thinking we can make a low prior to the harvest this year. So what do you do? Well, I think if you bought ECO this year, you're thankful that you did. This is an updated version of what I had in my newsletter a week or so ago. This is our ECO SEO indemnity worksheet and matrix. And so the first page of this is the worksheet. In the worksheet, we plug in the higher the base price and the harvest price. Well, today we're at 402. We still got a ways to go till October. We're well over a couple of months away from finishing setting that price. But if you want to see where the policy is at today, if you use the 402, you get to use the higher of these numbers times your APH to come up with the crop value, take that times the percentage, the band of coverage, which most people had 86 to 95. And if you bought the 100% of that dollars of coverage, that's worth $97 an acre. In this particular county in Illinois, the expected county yield was 220.8. I plugged in here last year's record yield. Morgan County set a record last year, 236.4. I would encourage you to look at a high number. In a lot of our counties across across the Corn Belt, we're talking about potentially a record this year. So if I plug in last year's record at 236, we're still looking at a loss. We're looking at a loss of what's $88 from our expected county revenue, which means that we made 91.6%. We're going to collect on about a third of the band, therefore 95 down to 91.6. Our ECO payment as of today, using these numbers, would be $36.78. And I think what's key here is that if you have this policy and the price keeps going down, then the policy is basically like an in-the-money put option. The one thing that's going to affect the value of that put is this yield. We have no idea where the county yields are going to end up, and that's why I would encourage you to look at a big number. But then the next step, the easier way to look at this policy is with the matrix. And so with the matrix, I use the 402 as the midpoint on price. We've got, 4-cent increments up and down from there. So again, we've got a ways to go till October. On the bushels, I highlighted the 236.4. You can change the percentages up here at the top. I started at 100% of a normal county yield, went all the way up to 112%. So you can see then the combination of yield and price and what the ECO payment would be. And if you think we're going to have a 240 yield in the county, then 406 is still paying you almost $9 an acre back. So this is where I think the policies are in the money for most people in most areas as we sit today. This 402 is probably going to change. We're going to move between now and October. Yield, we don't know. And that's why I think the matrix is good. And I think it's good to, for producers to be able to take a look and see how the policy is working with different combinations. Good for your lender to look at, get an idea of where the policy might pay. And so the other alternative or the other strategy or thing you might want to consider, I don't think most of us want to be a seller right now at the markets where they're at. I think we've kind of overdone it. We're probably below our break evens for the most part. So if we can help it, if you've got bin space, one thing I'll mention is the loan program this year on corn. For all of the crops, the government raised the loan rates 10%. So the corn loan rate's going to go from 220 to 242. So that's a little bit helpful. If you got storage space, may want to consider the loan rate program this year. I think as you get into 2026, if demand continues to stay strong, we're looking at very high fertilizer prices. That's another topic for another day. I would have to anticipate we're going to lose a few corn acres in the United States next spring. So I would tend to lean towards being a little bit positive towards some opportunity in the marketing side on out into next year. So going back to the option thing, here's December options right now. What can you do? Well, if I'm just scared to death that this market's going lower, I could go buy puts. I could buy a $4 put today at about 13 cents. I could buy a 380 put for about 5 3/4 cents. I can do that, at least lock in a floor just in case this thing just gets brutal and markets keep going down. If I want to lock in a potential indemnity payment with ECO, let's say we get to a point where I think we're looking at maximizing that $97. What can I do? Well, maybe I buy a call option then to protect if the market goes up, then the call's going to offset. It's going to make what I would lose in the indemnity. Maybe I could buy a 420 call. It's about 8 cents today. If the market goes a little lower, maybe I get that bought for a nickel or something, just in case I want the upside. I'm not a big fan of doing that because I'm already long a whole bunch of corn already. Why do I need to take a long position in the market? So I use my insurance policy basically like a marketing tool. Some people like to look at it separately as a separate entity. If you're doing that, then you buy the calls then to protect that indemnity payment. Another similar type strategy to doing that would be selling puts. And so I think if the market doesn't go down or if the market goes up or stays sideways, then maybe I want to collect some money out of the market. If I'm not afraid of it going much lower, if I think the bottom's in, I could sell a $4 put today and collect 13 cents. Now, when you sell options, you do have to maintain margin on it. But to me, selling a put and buying a call, they both basically do the same thing. You're anticipating an upside market, but at least in this case, I can collect 13 cents a bushel. If the market goes back up, I keep the 13 cents. I would not get my indemnity payment if the market goes high enough from ECOs. So that's one way to at least lock in a little bit of money. So there's a few things there. I'll talk a little more about them in our aftermath webinar next week, but I just wanted to introduce that here today. So to me, these are the three things you can do today. I don't want to be a seller when the RSI is at 33, stochastics are moving into single digits. Utilize your ECO, maybe even SCO if you've got that as a put option, depending on your county yields. Use options to lock in price direction. Consider using the loan program here this fall. So with that, again, big crop it looks like at this point. So we're just trying to share some ideas on what to do with it. Appreciate your opportunity to visit with you. Thank you. And we'll talk to you again real soon. Thanks for listening to this month's Thinking Cap.